AMD is back on every watch list, priced near the 160s and headlines everywhere. And no, they don't need to beat Nvidia to win. Here's why being number 2 might be the smartest play in the room. From dump trucks to doctor's charts, my name is Dr. StopLoss here on YouTube. Former garbage collector turned doctor, psychiatrist, and I've been trading in the stock and options markets for the last 8 years, so I know irrational behavior when I see it. The goal of this channel is simple. It's to give you clarity in the markets, help you build a profitable skill set, and show you how finance can actually be the boat that takes you where you want to go in life. I'm just your average doctor with a mic, guys. I'm not your fiduciary. This is infotainment, not investment advice. Please trade responsibly because nobody, and I said nobody, brags about their losses at Thanksgiving. And we don't want that to be you. We don't want you to be the guy or the gal who's sitting in the corner talking to the turkey alone. That's not what we want for you. All right, let's get into it. Today, we'll break down what's fueling the AMD buzz, Wall Street's view, my valuation take, and the bull base and bear cases over the next few years. AMD can ride the AI wave, steal CPU share, and benefit from not NVIDIA demand. And that might be enough to make exponential returns on the investment. So guys, let's start with what Wall Street is saying. As of September 18th, AMD trades around 150s and 160s. The 12-month consensus target, MarketBeat has it at about 180 across 38 analysts, with estimates ranging from as low as 140 to as high as 210. TipRanks lands in a similar spot, an average of about 183 across 35 analysts with a range of 120 to 230. So there's a bit of a gap there, about a 100-point gap. And here's the catch, AMD trades at roughly 43 times forward earnings on a non-GAAP basis with analyst projections. That's a premium valuation, which means if execution stumbles even slightly, the stock can get punished pretty hard. We're going to get a little more into detail about that, though, as the video goes on. Guys, here's my take. At analyst estimated 35 to 45 times forward earnings, you're paying pistachio prices for peanuts, but the peanuts might be roasted with AI butter. More on this later. We'll talk more about that in a second here. My fair value anchor or base case for the next 12 months is around 190 to 220, assuming 15 to 20% top line annual growth and margins drifting toward the mid 50s to 60s as scale improves. If execution outpaces for Radeon Open Compute, that's like AMD's version of NVIDIA's CUDA, adoption and data center ramps keep surprising. The upside in the stock price will extend for sure. If not, things could get spicy on the downside. In the bull case, AMD cements itself as the number 2 in AI chips, and that's all it needs to win. To put it in perspective, it doesn't even need to get to half of NVIDIA's market cap to 6-7x in share price, which is insane if you think about it. The story starts with the AI wave and data centers. AMD's MI300 has already been its fastest product ramp ever, and with the MI350, which came out in June 2025, and MI400 coming out in 2026 generations, which are, they're coming. The bulls believe top-line revenue could accelerate much faster than consensus models are baking in. If those chips gain traction with hyperscalers and ROCm keeps maturing, AMD's AI revenue curve could steepen dramatically, hitting a legitimate growth curve, the likes which we haven't seen in some time. And here's the kicker. When revenue grows faster than analysts expect with margins expanding, the forward PE doesn't just look high anymore. It drops quickly as the price catches up. In other words, our peanuts with AI butter become more valuable than the pistachios, which is good. That's good. Yeah, we like AI butter pistachio peanuts. On top of that, the upcoming gaming console cycle should lift AMD's semi-custom business. And unlike past cycles, this one comes with better economics. Pair that with AMD's relatively recent acquisition of Xilinx, I think I said it right, which brought in a high-margin field programmable gate array business, and the overall mix starts looking a lot healthier. Together, these drivers point to a stronger gross margin and improved operating leverage compared to prior cycles. Put this all together, and the bull camp sees AMD not just at $200 in the near term, but pushing towards $300 plus over the next 2 to 3 years, with blue sky scenarios that call for $400 to $500 plus by the end of the decade, even without a potential hype cycle. Who knows how high it could go in that case? And one more thing, Lisa Su. That's all. She's just great. She's great. She is not a pumper, which is good for investors getting in today and in the long run. She tells it like it is. So just a pro tip of mine also, watch for the revenue, the top line at the next earnings report. Estimates in the mid 8 billion range, but if it breaks 9 billion with the release of the MI350 in June, who knows how much that's going to affect the top line. 9 billion would be a great sign. If it breaks 10 billion, which is possible, depending on MI350 demand, watch out, we might blast off. Who knows? We'll see. So in the base case, AMD executes well, but not flawlessly. Data centers remain a key driver in MI350 and MI400 adoption, help AMD stay a credible alternative to NVIDIA. Though growth runs closer to expectations than blowout surprises, revenue still compounds in the double digits. Gross margins gradually move into the low to mid 50s. The semi-custom business also gets a boost from the upcoming console refresh cycle, which typically brings better economics than the late stage of the prior generation. Add in the high-margin FPGA, the field programmable gate array business from the Xilinx acquisition, and AMD's product mix steadily improves, giving them healthier gross margins and more operating leverage over time. This would peg AMD around 180 to 200 in the near term and 240, I'd say 220s, 240s to 300 in the 3 to 5 year window if everything stays on track. In this scenario, AMD doesn't threaten NVIDIA, but it continues to thrive as the reliable number 2 and keeps Intel on the defensive, while offering hyperscalers just enough leverage against NVIDIA to keep business flowing. It's steadily compounding, not fireworks, though. Keep that in mind. And now, the least favorite, but possible. Who knows? We don't know. Who knows the future, right? The bear case, the scenario where the story doesn't go according to plan. First is competition. NVIDIA still controls the dominant software ecosystem that most AI developers build on, which is CUDA, hence the CUDA moat, which makes it harder for AMD to win market share quickly. If AMD's MI350 or MI400 chips don't get the adoption investors are hoping for, data center growth could stall just as fast as it ramped up. And in that scenario, instead of earnings growing into today's valuation, the stock could get hit from the other direction, with the PE multiple shrinking while the price drops. Second is the margins. If the console cycle is weaker than expected, or if semi-custom revenue or semi-custom volumes disappoint, that margin lift investors are counting on doesn't materialize. Pair that with pressure on data center pricing, and gross margins could slip back under 50%, which wouldn't be good. Third, macro and policy risks. AMD already warned that export restrictions could shave more than $1 billion off revenue in 2025. If US-China tensions escalate, it's not just data center GPUs at risk, it's a big piece of their future pipeline. Put it all together, and the bear case lands AMD back down in the 120 to 140 range over the next year, and around 150 to 200 price range in the 3 to 5 year time frame. That's not because AMD suddenly became a bad company. It's because expectations are sky high. High growth stocks are priced for perfection, and the second the script changes, the stock can reset hard. History reminds us AMD has had 50% drawdowns before, and in a chip downturn, it could happen again. So let's zoom out. AMD's trajectory isn't just about chip specs, it hinges on whether the broader ecosystem, geopolitics, and strategic moves tilt in its favor. Let's talk about some of the risks and the catalysts that are coming up. In regards to the risks, the CUDA ecosystem inertia, NVIDIA's software ecosystem is a heavy barrier. Even best-in-class hardware from AMD needs deep integration to grow traction. And we're talking more about like the software side of things when we talk about the CUDA moat that NVIDIA has. AMD's got some catching up to do in that regard. Geopolitical policy risks. Export restrictions already trimmed over $1 billion from 2025 revenue. Escalating tensions or licensing delays could amplify that. Execution mapping to expectations. Analysts assume gradual GPU adoption and favorable console cycles. Any slippage in MI350 or MI400 ramps or console strength could trigger quick re-rates and a drop in the stock price. Market sentiment could shift. If the AI hype fades or tech multiples retreat, AMD could be caught in a broader correction as well. Think of the macro there. Thinking about the catalysts, MI350, MI400 ramp up, that's a huge one. MI350 delivers 4 times compute, 35 times inference performance generation over generation, winning analyst praise for performance density and cost advantage. HSBC doubled its price target to 200, citing MI350's pricing and positioning versus NVIDIA's Blackwell platform. I don't know if you heard as well. NVIDIA actually had to drop some of the pricing for some of their chips because of that pricing positioning that AMD was doing with the MI350. The inferencing boom as well. MI350X and MI355X are positioned squarely for the AI inferencing surge, potentially capturing 10 to 20% of what analysts see as a 500 billion plus AI accelerator market by 2028, pushing GPU sales north of 50 to $100 billion. Rack scale platforms, the preview of AMD's Helios rack system integrating MI400, Venice Epic, and Pensando NIC positions them for hyperscaler deployments in 2026. Strategic cloud partnerships, OpenAI's interest plus rumored AWS, Oracle, plus Middle East deals, particularly Saudi Arabia's Humain or Humain. I would look into that if I were you. I don't know too much, but that's a deal. They signal real traction beyond the pilot stages. The bottom line, guys and gals, is that AMD doesn't need to be the king. I guess you could say it just really needs to be the queen on the board. With the stock around the 160s, the street estimates sitting near 180 to 183, and my base case at least 200 plus over the next 12 months. 6 to 12 months, really, and maybe even more if it hits a growth hype cycle. And here's the bigger lesson in investing: you don't always need to own the winner to win. History shows that credible number twos can deliver outsized returns simply by being the viable alternative. The key is not confusing who dominates the headlines with who actually compounds your money over time. Never forget that. Now you gotta tell me, all right? I've been thinking this the whole video. You gotta tell me, guys. Are you team bull or are you team bear on AMD? Team bull or team bear? Left or right? You let me know. Drop your thoughts in the comments. If you enjoyed this analysis and you learned something new about AMD, hit the like button and we'll keep increasing your return on investment with these videos together. Have a great one, guys, and I'll see you in the next video.